And as usual, with your number of the day. Today, that number is 32,248. That, according to the Youth Employment Service, is the number of job opportunities that have been created for young people. The Youth Employment Service is a collaboration between labour, civil society, business and government, in which businesses create one-year paid positions for people aged between 18 and 35, receiving a minimum stipend of 3,500 Rand a month. South Africa has an unemployment rate of 29.1%, and youth unemployment sits at about 40.1%, or 8 million people, according to Statistics South Africa's quarterly labour force survey in the fourth quarter of 2019. So I'm joined in studio by Mark Ashton. He's the founder of Decosatio. He believes that although South Africa's unemployment and economy is a challenge, there are reasons to celebrate. Mark, thanks so much for your time on SABC News. You've written an article where you call for an end to the kind of pessimism that surrounds the South African economy.
Yeah, I think it's just become so pervasive. I mean, I just look at talking to other business people, and there's often this idea that nothing's working anymore in South Africa. There's no good stories to share. And it was quite, for me, I deal with a lot of entrepreneurs, different types of businesses, different industries, and there's innovation happening all around us. We look in the agri sector, everyone's saying that nothing's going to work in that sector, and yet it's a job creating sector last year. I've seen fintech entrepreneurs, legal tech entrepreneurs. There's so much happening, and I just feel that this negativity has become so pervasive, and it's time to actually start pushing back against it and say that there are actually some good news stories to celebrate in South Africa.
You've used that example of the Youth Employment Service and over 30,000 people who've had job opportunities given to them. But when you look at that number, I know that the amount of money that they've earned is also quite high, but that's when you put that against 8 million young people who are unemployed, that doesn't seem like a very big dent.
So I think there's got to be seen in the context of what the various instruments are out there. So the Youth Employment Service is a not-for-profit company, so I think there's often a perception that is run on a for-profit basis, a not-for-profit organisation. It receives no government funding, no support. It effectively has to generate income from creating these work experiences for South African youth. If you look at that number that you've quoted there, that's 1.4 billion rands worth of youth salaries. That's 32,000 youth that have never had an opportunity to get their foot in the door. And remember, the multiplier effect of that is, and I'll give you a very good example, one of the youth that works in our consulting business is a Yes Youth. He has a BCom accounting degree. He has economics qualifications from a business school here, plus a business management certificate. He's been sitting at home for the last 4 years, unable to break into the workforce. Now suddenly he's got 4 or 5 months work experience. His social capital is improved. He's got the opportunity to meet new people, and he's already looking and saying, well, how can he go and get a foot in the next position from a finance position? So I think that there's a lot. You forget that the access to that first job is such a critical part of the employment journey.
You've also mentioned the agriculture sector. Let's talk about the numbers there and why you think there are opportunities there.
So I mean, I think, we often hear all this talk about expropriation without compensation. Nobody's going to invest in the sector. The IRR is on a very intense campaign at the moment to say that even if you lose your property, you're still going to owe the banks. There's a lot of misinformation and disinformation that's being put out into the market at the moment. And yet, if you look at the actual hard numbers out of the Court of Labour statistics, 36,000 new jobs were created in the agri sector. Now, you can't tell me that there's nothing good happening in the agri sector. You look at the blueberry industry in South Africa, cannabis is another huge one where there's a lot of discussions around building new industries, whether it's supply, distribution, manufacturing, medicinal, etc. So there's a lot of opportunity being created there. But we just need to think a little bit differently about our traditional agri methods and the types of industries that we're kind of looking at and saying what's being disrupted at the moment.
There's also, from the opportunities that you've spoken about and from the people who are unemployed at the moment, my apologies, there's also a look at trying to invest better and trying to get into spaces perhaps that were previously closed. Easy Equities is quite a good example of that you've mentioned, of how people are now starting to invest perhaps more than before.
So, I mean, I really enjoy and I have a lot of respect for Charles Savage, who started Easy Equities. I mean, he came in for a lot of criticism when he tried to launch that business in South Africa. Why should traditional industries be disrupted? Why can't the large asset managers and large stockbrokers just continue to run business as usual? And there were people saying, well, why does an ordinary retail investor need to get into the market? Charles celebrated, I think it was in January, 250,000 retail investors now participate in that platform. That's 250,000 people who can go and buy shares in JSE listed companies. I think they've got property coming up now. And that number is significant, because if you took all the stockbrokers before that, there were only 200,000, excluding easy equities, there were only 200,000 active investors using traditional stockbroking accounts. Everyone else goes through traditional retirement products, etc. So Charles has effectively doubled the size of the potential client base. And Charles always said to me once, there's this thing, momentum is one of the most powerful forces out there, and when you get a little bit of positive momentum, it becomes a mission, something that people rally around. And that's why I think Charles has done so well with these equities.
Mm-hmm. How much does perception of South Africa and its economy actually move tangibly anything? Adrian Gore at Davos in 2019, I think, spoke up South Africa so much and spoke about how South Africans in particular talk down their country and the effects that may have and the very good things that are there. But I want to know, how do you balance what you're doing and what he's spoken about with also accepting the realities that there are many challenges in South Africa and we are in trouble, especially financially?
Absolutely. So I'm a realist. I come out of a world of financial journalism. I lived through the global financial crisis. I've lived through the last 10 years on the stock exchange where things haven't really gone our way. And what I've seen, though, is just this pervasive negativity in terms of everything that's being built. All this innovation out there. I mean, I spent some time at the Innovation Hub there in Pretoria. There are companies there that are going and winning massive export contracts. We never hear them. We never celebrate them. And I think the point that I was trying to make is that, yes, there are a lot of things that are wrong with the economy. There are many things that are structurally wrong. Vertical and horizontal integration of supply chains still makes it very difficult for small businesses to actually break into these bigger corporates. But the reality is we've got an opportunity to change things, whether it's cannabis, whether it's easy equities. Traditional industries are being disrupted. We're able to bring in new people, new innovation, and the speed of change that's happening in South Africa can actually be a good thing. You look at the power issues that we're facing at the moment. We can't continue with the power setup that we have. So people now have to go and say, well, how can we build solar, wind, energy, energy, water solutions, and say, well, what can we do differently? And to me, there's a cool factor to that. I think it's nice just to be able to see businesses saying, let's do something tangible, let's stop doing things the way we are. Definition of insanity is to keep doing the same thing over and over and expecting a different result. And I think we just can't let this negativity constantly eat into what we do. It's a Monday morning. We should be able to wake up and say, let's go and look for an opportunity. There are opportunities all around us. We just need to embrace them.
Mark Ashton, founder of Dekusatyo, joining me in studio today. Thanks so much for your time on SABC News this evening. President Cyril Ramaphosa's announcement of the establishment of a sovereign wealth fund has sparked debate among economists. The president gave no detail on the fund, and many are wondering, where is the money going to come from?
We have decided to establish a sovereign wealth fund as a means to preserve and grow the national endowment of our nation, giving practical meaning to the injunction that the people shall share in the country's wealth.
A sovereign wealth fund is a government-owned investment fund often established with reserves or national savings. Through targeted investments, it can be used to diversify the economy and to generate wealth for the country and its citizens. A sovereign wealth fund can also be used to manage the value of the currency to achieve national development goals. It also enables the country to borrow at favorable interest rates. The disadvantage is that it can be open to abuse and corruption. Now, President Ramaphosa's announcement that the government is going to establish one took many by surprise. The main question being, where is the money going to come from?
We're at the moment really in a very, very tight spot as far as our economy is concerned. Some critical decisions will now have to be made, and it's got nothing to do with a sovereign wealth fund. That doesn't make our life easier. We have to make decisions around energy. Government has to decide how is it actually going to cut spending to reduce its deficit and to contain this massive build-up in debt, bearing in mind that interest on debt is now the fastest growing item in the budget.
Professor Chris Maligano from Wits University's School of Economics and Finance is a long-time proponent of a sovereign wealth fund. But even he is a little suspicious of President Ramaphosa's announcement.
problem is that the idea is floated around without any talk about state ownership of the minerals in South Africa. So it seems like the idea is being hollowed out of content and context. So we are still to hear from the Minister of Finance where the capital injection is going to come from.
Maliane suspects that the president's announcement is aimed at neutralizing his detractors at the ruling party's National General Council in June.
The NGC is coming and questions will be asked. How far are we with the implementation of the resolutions of NASREC? How far are we with the establishment of the Sovereign Wealth Fund? How far are we with the State Bank? How far are we with the nationalization of the Reserve Bank? These are some of the questions that will be asked. So in the run-up to the NGC, he will have to show that, look, I've announced that there should be a sovereign wealth fund, even if there's no content.
The president left it to the finance minister to flesh out the idea in his budget speech later this month. Bongani Mutwa, SABC News, Johannesburg.
Economists are questioning the role of the State Bank as announced by President Cyril Ramaphosa at his State of the Nation address last week. Last year, the National Treasury shot down the idea of a state-owned bank, telling Parliament that it would be hard to justify.
Last week, President Cyril Ramaphosa announced that National Treasury and the Reserve Bank are working together to ease pressure on business and consumers. This would come in the form of a sovereign wealth fund and a state bank. A state bank is envisioned to extend financial services access to all South Africans. But economist Dr. Azar Jamin says clarity is needed.
Before the government actually starts pushing that idea, it should come out more succinctly and say, why do we need a state bank? At present, we've got the post bank anyway, and the government owns that. So why do we need a different bank?
More light will be shared next week during the budget speech to be delivered by Finance Minister Tito Mboweni.
Theoretically, I would imagine the idea of a state bank is that it would encourage greater risk appetite and a willingness on the part of the state bank to lend money to ordinary individuals more readily than is the case with commercial banks. But then one has to ask oneself, are those risk parameters that the state bank would introduce not eventually going to see its own demise because of bad loans and bad debts that might come about? I mean, the commercial banks don't have their rules for nothing. They have their rules in order to protect themselves from really bad debts.
Associate Professor of Economics at Wits University, Professor Chris Malikane, says setting up a state without nationalization of the Reserve Bank is futile.
To set up a state bank without a nationalized Reserve Bank, really, I mean, it's going to be a very, very weak state bank if it does not have a strong partner in the reserve, in a nationalized Reserve Bank.
Meanwhile, the Reserve Bank says it's pushing ahead with the sale of its 50% stake in African Bank. This stake was acquired when African Bank came out of curatorship. The Bank of Last Resort estimates that the sale could be completed within 18 to 24 months after finding a suitable buyer. And it is yet to be seen if proceeds will be used to fund the envisioned state bank.
The idea of using some of the proceeds of Reserve Bank selling off its stake in African Merchant Bank being redirected towards funding a state bank or in conjunction with a post bank, who knows, may be something, one way of funding it. But the real problems are not establishing the bank in the first instance. It's ensuring its viability in the longer term.
Diabo Seto, SABC News, Johannesburg.
In international news, U.S. House Speaker Nancy Pelosi says accepting Chinese domination of 5G through tech giant Huawei would be choosing autocracy versus democracy. She was speaking on the last day of the annual Munich Security Conference. Chinese telecom giant Huawei is at the center of an international political storm as the United States seeks to convince countries to ban the company from their mobile networks. Washington says its technology could allow for Chinese spying, an allegation denied by Huawei and Beijing.
This is about choosing autocracy over democracy on the information highway. It's about putting the state police in the pocket of every consumer in these countries because of the Chinese way. And so you ask about an alternative, and what I said a couple of days ago and yesterday is that we should not be signification of the information highway, but an internationalization of it. I use the example of the Romans. They built the roads that enabled the Catholics to spread Catholicism by mail and by walking and the rest. This is the information highway of now, and why would we want to give license to the Chinese to direct the traffic on that information highway of the future? There's a big price to pay in terms of national security, in terms of economy, and in terms of our values and our governance. And that's why we have bipartisan support for this position. It's not about an economic advantage. It's about a values urgency, autocracy versus democracy. We choose democracy.
That brings us to the end of the bottom line for tonight. Let's take a look at the indicators before we go. At the close of the market in Johannesburg, the all-share index was up 0.68%. The rand was trading at 15 rand to the dollar and 16.26 to the euro. On the commodities front, a barrel of Brent crude oil cost $57.65, and gold was trading $1,580.97. Let's take a look at the rest of your indicators, and it's good night.